Well, hello everybody, I'm L.A. Little, and this is your weekly NeoTA wrap. We take a look at these markets. We do it from a neoclassical perspective, each time asking ourselves just one question. What happened last week? What might it tell us about the coming ones? I do this show every Sunday evening, broadcast at or before 10 o'clock Eastern Time, archived on YouTube under the channel L.A. Little. As far as what happened last week, it was a mixed week. NASDAQ lost. Russell Dow gained, S&P was flat. Really not a lot there. If we move over and look at the indexes, not a lot here either. I mean, we had a push down, a push up, and a push back down on Friday. What's really happening is you've got this ABCD structure that's attempting to be created either to the upside or the downside based on what happens with this retest regenerate, which is what's being attacked right now. So ABCD structure potentially on the downside, that looks like this, right? That could take you down into these lows, break those swing point lows if in fact it materializes. And we could flip it around and go the other way and say, okay, we could have an ABCD structure going back this other way, and that one would bring it back into here and take us back towards the highs. All of this is happening in the context of ranges, right? Those ranges have been in effect for quite a while. If we look at them on this time frame, they go about there, but really we should pull it back, put it on the weekly, look at it on the weekly time frame, and see what's been happening there. And what has been happening there has been happening there for a long time, and essentially we've had these ranges that have developed over time, and those ranges pretty much have been in effect throughout this push to the upside. With this happening, what you can see is the length of the range and the width of the range. So the width and the length, right, as we go in time, forward in time, continues to decrease. Well, I should say at least the width is. The length here is actually as long as it has been. But that width is decreasing, and with the width decreasing, in other words, the volatility has decreased. And matter of fact, in 2015, the volatility is very low. You had this one minor push. Outside of that, it's been very much range trades the rest of the time. So let's push over and look at the rest of the indexes to see if there's any clues there. Essentially, all of these you're going to see the same sort of situation, and that is that you had a swing point low that was broken. Here's the break on it here. Gets under it, back over it. Now this is the NASDAQ, the composite's been one of the stronger ones, right? It goes all the way, does a full retest, regenerate, attempt now to the downside. This is a bearish one. That one's going to try to push back lower. Again, you have the same exact situation with the ABCD structure that would push it down into these lows. Or if it goes the other way, right, you would have an ABCD structure looking something like that that would take it back to new highs. So whether you're looking at the S&P, the NASDAQ, the NDX, they're all the same, right? They've got the swing point low, bearish retest, trying to regenerate lower. The only one that looks different is the Russell. Now the Russell is the small caps, and the Russell is hardly giving anything back. This has been on a fairly nice uptrend. You've had ABCD structures pretty much all the way up. They haven't always completed, but they've come pretty close. And as you look at each of these continue to try to push up to do what? To come back into the swing point high, which was the breakdown bar. That test there's a high right above it, right? So you got two swing point highs sitting right up here. If this does project higher off this latest little pullback, that would actually take you to new highs. Russell, strongest right now in terms of the way it's trading. I like the way it's trading. It looks to me like it's trying to tell us that domestically we're starting to see some better numbers. That's saying earnings are going to be better in the domestic names. right? The money's kind of rotating back over to the Russell right now. Other than the small caps, it's all about Europe and a little bit about Asia. Europe is where all the news is. We've got the Greek situation going on there. And Europe actually had the same sort of situation that we did, in that you had a swing point low broken. Actually, you had a couple. This swing point low, and I'm on the CACs now on the daily. This swing point low breaks underneath, gets back, does a full retest, tries to break higher, but now tries to break back down on a regenerate lower. This is going to be the real test. Friday, it didn't have the volume as it traded underneath this low and into the high of the low. If this holds again on Monday, and remember, there was talks all this weekend. It looks like those talks did not reach any kind of a settlement, so Tuesday is going to be the next kind of news event. But if this does hold on Monday, this area here, I would expect this is going to do an ABCD structure to the upside, something like that, get it back over this swing point low and put it back into some sort of a sideways range trade again. If you go to the weekly, you can see that this had extended to the downside. Volume was expanding. But when you look at this low back here on the May 4th, you're doing 7.8, you're only doing 6.1. You have less volume getting under it, does a doji and it holds. If you look at the low over here, 6.2 there, you got 6.1 here, so you hit it with about the same amount, but it holds. Now that's the CACs, which has been stronger than the DAX. If we look at the DAX, you got the same situation on a swing point low. You break underneath it, you come back over it, you do a full retest, now you're trying to regenerate. It also has the same characteristic, gets into the high of the low and can't break it down. If you go to the weekly, however, this one had already broken the swing point low that was registered back on May 9th, and that low that was on May 4th was 11,167. This closes at 11,196, gets under it, back over it. So at this point, you've actually got the same situation as the CACs, with the exception of the swing point low having been broken. All in all, what does it tell me? Well, it tells me that Europe most likely wants to try to bounce this week off of whatever this Greek news is going to be. I have no idea what it's going to be. Usually somehow they find a resolution. It looks like the market is sniffing that out. If we go over to Asia, right, Shanghai still pushes higher. New highs last week, closes at a new high, both on the daily and on the weekly. There is no end to this, at least not yet. If we look at the Japanese Nikkei, the Nikkei climbs back up. This one is actually going to try to get into the lows of these two bars from May 29th to May 28th. That's probably where it's going to fail, turn around, come back down. If you look at it on a weekly, still looking pretty good, hanging at the highs, lots of volume up there, but it looks like it's about ready to consolidate. If we go to Hong Kong, we've talked about Hong Kong quite a while and quite a bit about this area here. It finally comes into it. Only took it about 8 weeks to get there. Bounces out of there, which is exactly what you would expect it to do. I expect it's going to try to trade back up into that area. So Asia, Europe, both of those look like they want to try and bounce. What is different, at least so far, is that what we're seeing in the secondary markets, and I'm going to pull them to just weeklies. For example, the All Ordinaries. This one has already gotten underneath a swing point high, so that was a bullish retest regenerate on the weekly chart that it was unable to hold. That says, hey, this thing is not nearly as strong as it looked, trying to go sideways instead of up. Yeah, it's some sort of a consolidation taking place. It's nothing to freak out and just throw everything away, but at the same time, it does serve notice that this market is weaker than we see elsewhere. If we look at India, same thing, breaks a swing point low, transitions to sideways, still trying to come back to that general area we've talked about before, which is kind of the ideal spot, which is back here. India also weaker than we see elsewhere. Brazil. Brazil's doing pretty good compared to the others in terms of the second tier world markets. This one looks like it's probably going to do some sort of a bounce and has been doing a bit of a bounce. If we look at the Toronto exchange, our friends up north having troubles coming back in. Still looks like it's going to come into this big bar from the December 15th area. If we look over at Indonesia, Indonesia is still struggling with their market, getting a bounce, but not anything special. Had came back into the swing point high the second time, doing more volume, get a little bounce, probably going to get some more pullback off of that most likely. Taipei, same thing, comes back deep, breaks the bullish retest regen zone, also says weaker than it looks. And finally, if we look at Korea, Korea also pulls back into the swing point high, so far holding it. This one likely gets a little bit of a bounce, but the theme here is once you get outside of China, of Japan, of the two large markets in Europe, it's not nearly as strong as it had been for whatever reason. And we don't always have to understand the reason, we just need to see the patterns that are taking place, the clues the market's giving to us. Those clues in this particular case say, hey, the rest of the world not doing so well. I suspect it has to do with the fundamentals, and the economics are just not as strong overall as people had hoped. So, to wrap it all up, it looks to me like this market's going to try to find a reason to push higher this week, and that is in the face of whatever happens with Greece and also what happens with the U.S. market with respect to the Federal Reserve. Which brings me to the bonds. Bonds get under, back over, doji, right? They're weak. They're still hanging. It's a tough road here. As bond prices go down, yields go up. So as this goes down, the yields go the opposite. As the yields rise, that hurts a number of things. Corporations turning their debt, so forth, right? The cost becomes greater. That also hurts their bottom line if that's the case. And then if we look at the dollar, which is the other potential culprit, and earnings will be coming up in about a month again. Dollar fading back in, still in a big range trade. This one is going to be kind of key as to whether it holds this higher zone or not. We kind of had three zones. You kind of had the top one, had the middle one, right, and you had the lower one. Next question is will it do another one on the downside? And that's possible. Come back into this little congestion area in here. That's going to be the next key on the currency moves. If you see the dollar get weaker, of course that's going to help the U.S. market in terms of the corporations' profits, which has been a big problem over the last 3 quarters. So it's going to help there. At the same time, it's going to shift some of the equations elsewhere in the world. In particular, the euro probably goes up, which makes it harder for the European markets during that time frame. But eventually, I suspect the euro is actually going to go down again. If we pull the euro up and look at it on a weekly, what you can see here is a lot of consolidation taking place on this particular time frame, right? And eventually, the trend that's in place will likely continue. So it's just a question of, how far does this thing bounce? And I've talked about it before, about the 119 area is about where you might expect it to bounce to if it clears this hurdle that it's trying to get over now, which is around 112, 113. All in all, not a lot happened last week, same sort of scenario. The big news this week, of course, is Fed in Europe, in particular Greece. And I suspect the Greece news is probably going to trump the Fed this week, because the Fed, in my opinion, has pretty much telegraphed what they want to do, and that is they're going to raise those rates at least once this year, probably in September. That's it for tonight. Kind of a short show, but not a lot happened last week. Looks to me like this week's going to try to find a way to bounce, and that's what I would be looking for. Until next time, have a great one. Take care, and I'll see you then. Good night.